This video brought to you by Royal Forex Signals. So Royal Forex Signals is a place where you can get Forex signal with high winning rate for free. No charges, no whatsoever. I myself have been using their signals for months and it's been a profitable trading for me ever since. So if you want to get the same signal and profit as I do, you can click the description button down below and join the group link. Don't forget to click the join button, and with that being said, let's get into the video. Hello everybody, welcome to Forex Mastery. So in today's video, I'll be showing you the hedging strategy. Okay, this is including the definition, the money management, and how to use this strategy itself. Okay, it's very simple, and I'll try to make it the simplest way possible for you. So definition is basically counter back price. Alright, for those who still don't understand what it means by counter back price is example. Okay, example, you want to buy at this certain price. Okay, so you expect the market will go bullish as you want to. So example, the price goes up, but suddenly it goes the opposite way, as you know, as many trades, many of our trades have been, it goes the opposite way and then it goes back to the right ways and all the stuff. Okay, so at this certain price, normally for other trading strategies, they will put their stop loss here. Maybe it's between 300, 400 or 500 pips gap, so it depends on them. But okay, so, example, if it goes the opposite way, for other strategy, the SL will be their end of their trading session. But for us, it's still a continue for us, okay, because we just counter back the price. So we put our sell limit here. Okay, once the price take our sell limit, so we want it to go the next price level. Okay, example, if this price and this price is 300 pips gap, so the second one should be also 300 pips gap between the second and the third. Alright, so in this case example, the sell limit take our take profit. So in this session is a win setup. Okay, so we win this setup. So that's basically it for the definition. It's just counter back the price if it goes the opposite way. Alright, for this strategy, it requires to have a 4 line, 1, 2, 3, and 4. And between each line should have a similar pips of gap. Example, if this line and the second line is 300 pips gap, so the second to third should be 300 also, and it goes on and on and on. So the third to fourth should be 300 pips also. It have to be similar. Okay, so okay, that's all for the definition. It's very simple. I try to make it the simplest way possible. Alright, okay, this is the money management. Okay, I hope you still stay focused with me because this money management is very important. Alright, so that you will have a good hedging trading session. Okay, so it's very important. I hope you still stay with me. Alright, what I mean by first, second, third, fourth, fifth, and sixth, also times 3 times 2, 2, 2, 2 is, example, your first trade is 1 cent or 0.01. Okay, so the second one here should be 0.03 because it times 3. It times 3 here. So the third one should be 0.06 because it times 2. Alright, it times 2 here. So it equal to be 0.06 or 6 cents. So the fourth one also will be 0.12 because 0.06 times 2 will be 0.12. So this is 12 cents right here, and then this will be 0.04 So, and also this will be 0.48. Okay, and the list goes on, and goes on, times 2, times 2, and times 2. But just to get the second one, you have to times 3. That's all. And then the next one, and until forever, it will be times 2 and times 2. So example, if you are your first rate is $1, so the next one should be $3, and then this next one should be $6 and $12 and $24. So, but to enter that kind of lot, you need to have a very very big capital. So you need to be aware with that. So money management is very important. Okay. All right. So let's go to the next one. Okay. This is the tutorial. This is what I meant by by the first, second, third, fourth, and fifth, and sixth, and goes on. So you will see why we have that here. Okay, at this tutorial. All right. Go to my line. Okay, example. We go with the blue color. Okay, example, if you sell at this level, 147.3. Okay, before that, as you can see, this is my line here. So you have 300 pips gap between each other. So you have to be similar. All right. Okay, so let's continue with our tutorial. So if you sell at this price, and then you want the price to go bearish as you want it to be, okay, but suddenly it goes the opposite way. So what you have to do, you put your buy limit here. Okay, once you enter your first trade, you need to put your buy limit, buy limit here. Okay, the opposite way, directly. Okay, so that in case you go somewhere, and then you left your MT4 wide open, and then suddenly if you don't put your sell limit or buy limit at the opposite way, I'm scared that the price will it goes the very wide wide pips gap. Okay, so what I mean is you have a very very long gap. Example, if the price right here is 147.700. Okay, example, so you will have 400 pips gap, so you have to change every line is 400 pips gap. Okay, so in this, okay, let's go back. So in this case, you put your buy limit here, so the price takes your buy limit, and then suddenly, okay, once it hit your buy limit here, you need to put your sell limit directly here. Okay, so the price suddenly goes to the opposite way. It doesn't hit your TP at here, your buy limit TP, so it doesn't hit there, so it goes the opposite way, and then suddenly it hit your sell limit here, and then it hit your sell TP at this price. Okay, in this case, this is a win setup. All of this is a win setup. Okay, let's calculate our profit. So we have sell, buy, and sell. So we have 3 trade here. So the first one is a win trade. Okay, it will be $3. Okay, because the price goes to take profit to the to our take profit. All right, so the second one will be negative 18. Why I times 600 is because, okay, this is our second trade, so it's a buy, but suddenly the price goes the opposite way, so it means this is the second to the third is 300 pips, and then the third to fourth is 300 pips, so it's 600. Okay, that's why we don't have a stop loss. Okay, so in total we still negative. Okay, 18 plus 3 is, you will get negative 15. But wait, uh, believe me, you still win this trade. Okay, so the next trade will be 0.06 times 300. So you get also $18. Okay, so it's a positive, negative, positive. So this is negative 18 plus 18 is 0. But then we have positive here is 3. So in this trade, we win by $3. Okay, our profit is $3. So it's a good trading, even though the profit is very small, but you still win. That's very consistent. Okay, if you keep on trading using this strategy, you will have a consistent profit account. So I hope you understand why I don't put any SL, or why this strategy don't have any SL. Okay, because in the end you still win in every way possible. You just keep on. If the price keep on playing at this price, you just need to double your lot, and so on. Okay, I will give you another example. All right, here. Okay, so the price take our sell limit here. So at this point we have three trades, 1, 2, and 3. So the price goes bearish, but suddenly the price goes bullish. So like this, it play at this price 147, example 147.5. So it goes this one. Okay, and then suddenly it goes bullish, a very strong bullish. So it will take our buy limit here, but and then the price still play at this certain price. So and then it still goes up, and then it goes down back. So at this time you take our sell limit here, and then it goes to our take profit at this price. Okay, for the take profit, okay, you need to put your take profit in every trades. Just don't put your SL. Okay, so if you have a sell limit here, the first one, just put your TP. So if you have a buy limit at this price, you just put your take profit at this price. So don't worry about it. And then okay, let's count our trade. So this is first. I will try to mark here. This is first. This is second. This is third. This is fourth. This is fifth. Alright, so let's count. So we have a still negative right here. Alright, I have my calculator. 0.12 times 600. Okay, we will get negative $72. Okay, so for our fifth trade is the same. Okay, if you calculate, it's still the same, negative. Sorry, it's positive $72. Okay, if you don't believe me, let's count it. 0.24 times 300. Okay, yes, it's 72. So in this world trading session, for this fifth 1, 2, 3, 4, 5, and 5 trade, you still win by $3. So it's still it's a winning trade. It's a good if you stay consistent, using this trade for your daily. I'm sure your account will increase in capital. So let's go to the tutorial on our MT4. Oops, sorry. Okay. Alright, so I have my GBP JPY 1 hour chart. Okay, so this is what I mean by 4 line 1, 2, 3, and 4, and the price is 300 pips gap between each one. Alright, to get this, this is actually a customized Fibonacci indicator that I customize myself. So if you want to have this kind of customization, okay, you can copy here. Okay, don't change anything in here, you just change here. So the Fibo level, for the level start with 0, 0.5, negative 0.5, and 1. Okay, if you want to have a 5 level, you just put another level, negative 1. Okay, so for the description, it's just this is a percent and dollar sign. So it is just it means the pips. So okay, right now I'm using this example. I'm using the stochastic as my enter price, and so as my indicator to enter the price. Okay, so let's find our setup example. If I want to, so this is a buy, so this is oversold, so the price shows that it will go bullish. Okay, so at this level means this is the candlestick. Okay, so I put my line here. It doesn't matter which line. Okay, you can use whether you can use this one, or this one. Okay, but I recommend to use this two middle line right here, 1 and 2. Alright, so example, this is oversold. Okay, so I buy at this price, so the price goes up, and then it take profit. So this is a win setup. Alright, so let's find a fail setup. Let's see if it have okay, where is the alright, I think right here. Okay, beautiful. So this is overbought. Okay, this is overbought. So the price should go bearish, should go downwards, but suddenly the price goes up, and up. Alright, so at this price we expect the price to go bearish, so we enter our sell order here. Okay, so at this price 147.305, we put our first trade. Okay, we sell here, but suddenly the price goes the opposite way, goes up, and up. Okay, in this situation I will put my I will change my level here, so it will be much clear for me to to see the next price and whatsoever. Okay, so in this case, sell, then it hit our buy limit here, and then the price goes up, and take our buy limit, take profit. So this is a win setup. Okay, how many trade are in this setup? 1 and 2, the sell and the buy limit. So that's about it. Okay, for this hedging strategy also, you can use any time frame that you want, whether it's 1 minute, 50 minutes, or even monthly if you want, if you are crazy swinger, so why not? All right, if you want to have a fast trading session, you can use the 5 minute, 15 minute, or very short time frame. Okay, example, if I'm using the 5 minute. Okay, I think to use for the 5 minute, 300 pips gap is quite big gap, so I try to change it to, you know, 200. Okay, I try to change it to 200. All right, beautiful. So we have a 200 pips gap right here, 147,885. So 685. Okay, perfect. So let's find our setup. Alright, in this case, this is overbought, so the price should go bearish. Okay, let's see. I put my level here. Okay, sorry, I'm using this level. Okay, so I sell at this price, 147.341. Okay, as I put my sell order, so the price goes bearish, but suddenly it goes bullish, bullish, and hit our buy limit here. So it goes up, and take our buy limit, take profit. So this is still a win setup. Okay, so you have two trade here. The first one is this first, and then the second one is the buy limit. All right, so let's see if we can find another setup. All right, I think this is perfect. Okay, so this is overbought, so the price should go bearish. All right, so let's see. Okay, you put your sell here, pop, you sell here at this price, so the price go and go bearish. Okay, this is win setup. Okay, let's try another currency, Euro USD. I think we will have a long sideways. So I'm using 100 pips gap for the Euro USD to sorry. Oops. Okay. Nice. Stop. Okay, where's my okay, stochastic. All right. So let's find our setup. Okay, right here. This is overbought, so the price should go bullish. Bearish. So you sell here, and then suddenly the price goes up, take our buy limit, and then it turn back to our sell limit, and then it hit our sell limit, take profit. So this is a win setup. So this is the first sell, second buy, third sell. So it ends at this price, 1.21997. So this is a win trading session. So as you can see, it's very easy. Okay, so you just need to be patient and require a lot of back test and exercise. Okay, let's go back to our advantage and disadvantage for this strategy. Okay, so this is our advantage and disadvantage. All right, as you know, not all strategy, in this world we will not have 100% accurate winning strategy. There's always a the bad sides and the good sides of one thing. So for the advantage, your account will, your account will keep on increasing. You know, you will always have a winning setup. You will have always a winning setup. Okay, but the disadvantage is just you need a big capital. If you are using $1 for your first trade, so you need a very very big capital to counter back the price if it goes sideways and all that. So it's very very risky also. That's the disadvantage, and also it can take a lot of time on the chart. Okay, because a certain time the market will goes sideways for a long sideways, and then you need to be patient for the price to take profit and whatsoever. So it can take a lot of time to to stay on the computer and such. And also for the strategy, I would like to remind you that if you I recommend for you to use GBP, JPY or gold currency, because you will have a high volatility price. If it goes bullish, it goes all the way bullish, and if it goes bearish, it goes all the way bearish. So it's very high volatility, so it will take profit with very very fast. So who doesn't like to have a short trading session? Okay, everybody likes it because it can save a lot of our time. So it requires for you to have a very high volatility currency such as GBP JPY or GBP AUD, GBP NZD or gold currency. Not recommend for you to use the Euro NZD because it's very low volatility currency. All right, I guess that's all for this strategy. I'll see you on the next one. Alright guys, now you learn all about the money management. This is including the calculation and the important itself. So let me remind you again, money management is so important that any trader, any professional trader will say the same thing. If you are losing at the money management, you will not go far in trading. You will lose all your capital, no matter if you have 1 million, 1 billion or 1 trillion. If you fail at money management, you will not gain profit from it. You will not be successful at it. Alright, so if you don't understand, if you have something to say to me, you can comment down below and I will try my best to reply to all of you. Don't forget to do me a favor, hit the subscribe button and the like button, and I'll see you in the next one.